The next 10 days carry a kind of tension rarely seen in the silver market, a moment where macro forces and technological demand are converging so sharply that most investors still don't understand how quickly the narrative can flip. Silver has always been underestimated, treated like gold's little sibling, but the coming days are set to challenge that perception in a way that could surprise even seasoned market participants. What's happening now is not simply speculation. It's a visible shift in the structural foundation of the silver ecosystem. We are watching a commodity where supply is tightening at the very moment global demand is accelerating. Industrial sectors, solar, automotive, artificial intelligence hardware, robotics, energy storage are pulling on the same limited pool of silver, and the mining industry has not kept pace with this acceleration. For over a decade, silver supply has trended below global consumption, but what makes the next phase critical is that the imbalance is now colliding with broader macroeconomic catalysts. Whenever technology-driven demand converges with macro weakness in the dollar, declining real yields and rising safe haven appetite, the setup becomes explosive, and this is exactly what is forming right now. Investors are not prepared for the speed at which sentiment can change. They have been conditioned by years of range-bound silver prices, which creates complacency, but markets do not move slowly when structural imbalances and macro triggers align. They move violently because suppressed assets tend to react in nonlinear ways. The next 10 days hold the potential for one or more catalysts: policy announcements, inflation data, liquidity shifts, or geopolitical events that could give silver the spark it needs. When assets sit in a coiled, compressed state, it doesn't take a dramatic event to unleash a sharp repricing. Even a moderate trigger becomes a multiplier. The world is also waking up to the reality that renewable energy transitions cannot occur without massive silver consumption. Solar manufacturers are preparing for record-breaking deployment. EV producers require high-grade silver for circuitry, sensors, and battery management systems. Data centers and AI infrastructure rely on it in ways the average investor doesn't yet see. Silver isn't just a precious metal anymore, it's a technology metal, and technology metals behave differently. They move in step with innovation cycles, not old-world commodity cycles. This is why the next 10 days matter. Markets are recalibrating to this new identity of silver. At the same time, major buyers are increasing their positions quietly, sensing what retail investors have not yet grasped. When institutional accumulation begins at a time of supply stress, liquidity thins faster than expected. The entire price structure can shift in days, not months. This is why investors often miss the early part of the breakout. They're waiting for confirmation the market won't give them until it's already moved. Historically, every major silver run has started this way, quietly, structurally, then suddenly. As we enter this compressed window, volatility should not be feared. It's revealing the market's stress points. When you see silver fluctuating more aggressively, understand that this is not random. It is a sign of recalibration. Price discovery is happening in real time. And once the market digests the incoming signals, whether from monetary policy, industrial projections, or capital flow data, the response can be immediate. The silver market is standing at an inflection point, and the next 10 days may determine whether it breaks out of its long-term ceiling or prepares for another wave of accumulation before the inevitable surge. Either way, the direction becomes clearer. Investors who understand asymmetry know this. The biggest shifts occur when no one is looking, when certainty is low but the data is loud. Right now, the data is very loud. Silver is preparing for a move that few are positioned for, and that is exactly why the coming days will be so critical. For years, the silver market has been quietly building pressure, almost like a tectonic plate shifting beneath the global financial system. Most investors don't see it because most investors only focus on what's loud, what's trending, what's already moving, but silver rarely announces its intentions in advance. It behaves more like a compressed spring, silent, underestimated, but storing energy with every imbalance, every deficit, every overlooked shift in innovation and demand. And now, as we move into the next 10 days, those forces are aligning in a way that the market is absolutely not prepared for. What's happening right now is not just speculation or emotion driven trading, it's structural. The supply side is facing constraints at a moment when demand from multiple sectors is rising simultaneously. The solar industry alone has crossed a threshold where silver is no longer a material. It's an essential resource that determines the pace of deployment. With global climate goals accelerating and nations competing for renewable capacity, the industrial world is consuming silver faster than new supply can come online. Mines cannot simply flip a switch and expand output. The lag between rising demand and new production is widening, and in commodity markets, that gap is where prices make their most dramatic moves. At the same time, macroeconomic dynamics are quietly reinforcing silver's upside. A softening dollar, declining real yields, and rising expectations of monetary easing create the exact environment where precious metals outperform. But silver behaves differently from gold. While gold moves with global liquidity and safe haven flows, silver amplifies those moves because it sits at the intersection of monetary demand and industrial necessity. When the macro tailwinds align with physical scarcity, silver doesn't just rise, it breaks patterns. Then comes the market psychology. Investors have been focused on equities, on AI, on energy transitions, and on rate cut speculation. Precious metals, especially silver, have been treated as afterthoughts. And this is exactly how major moves begin, when positioning is light, when expectations are muted, when sentiment is complacent. In these moments, even a modest catalyst can trigger a momentum shift that cascades through the market. A breakout above key technical zones can force short, covering, algorithmic buying, and rapid inflows from traders chasing the move. And with silver's thin liquidity compared to larger markets, price action can accelerate with remarkable speed. The next 10 days hold several potential catalysts. Macro data releases, monetary guidance, manufacturing demand indicators, and sector-specific announcements that could directly impact industrial consumption forecasts. Any one of these could be enough to jolt silver, but when you have multiple possible triggers converging in a market already primed for disruption, the move doesn't have to be extreme to be significant. It just has to happen, and the reaction could be disproportionately large. What makes this moment so compelling is the asymmetry. The downside appears limited because supply deficits and structural demand are not going away. Even if the market cools temporarily, it is still riding a long-term trajectory shaped by technology, electrification, renewable transformation, and global hedging behavior. But the upside, driven by any sudden recognition of these tightening fundamentals, could be steep. Silver has a long history of moving sideways for long periods and then delivering its gains in short, violent bursts that reward only those who were positioned early. So as the next 10 days unfold, the silver market could experience one of those inflection points where fundamentals, sentiment, and catalysts intersect. Most investors will be caught off guard because they were looking in other directions. But those paying attention to the underlying patterns, the deficits, the macro environment, the industrial surge, understand that moments like this don't announce themselves. They simply arrive, reshape the market, and leave everyone wondering why they didn't see it coming. Imagine a world where a silver-looked metal suddenly becomes the center of a global squeeze where demand across green energy, electronics, and safe haven investing collides with structural supply constraints so tight they leave the market gasping for air. That world is now, and silver sits at its heart. Right now, we're witnessing a phenomenon few anticipated but many will feel, a multi-year deficit in global silver supply. Even as industrial demand surges from solar panels powering a cleaner future to electric vehicles and mass electronics mining production hasn't kept pace, the result, inventories shrinking, physical silver becoming harder to secure, and pressure mounting from all sides. Metal, COM +2, the Silver Institute +2 at the same time. Monetary conditions have tipped decisively in silver's favor, with central banks hinting at possible rate cuts. Real yields on cash and bonds remain under pressure. Holding a non-yielding metal like silver is no longer a cost of carry, rather. It's a strategic hedge against currency devaluation and market uncertainty. The weakening dollar and rising inflation expectations only amplify its appeal. Invest +2 affects Street +2, but beyond macro trends and supply charts lies a structural shift. Silver is no longer just jewelry or bullion, it is the backbone of the green tech revolution. Solar panels, EVs, electronics, data center infrastructure all rely on silver's unmatched conductivity and versatility. As global push for renewables and high-tech infrastructure accelerates, demand for silver isn't optional, it's foundational. And that gives the white metal a robust floor under any rally. The Economic Times +2 use a gold +2 now. Picture the next 10 days with markets already tight, inventories thin, and money flowing in. It wouldn't take much, perhaps a fresh signal of monetary easing, a macroeconomic shift weakening major currencies, or a surge in industrial orders. Any of these could tip the balance. Suddenly, silver isn't just climbing, it's exploding. A rapid, sharp rally, as investors and industries scramble to secure physical metal, could shock the market. For those watching from the sidelines, today's price may feel steep. But in context, amid tight global supply, growing structural demand, and macro tailwinds, it may be the last cheap entry before a cascade begins. Treat silver not as a passive holding, but as a strategic asset with asymmetric upside. If you get in before the rush, you might ride a wave that redefines value in the precious metals universe. Urgent silver warning, huge price shock coming in 10 days. Imagine for a moment that one of the world's most versatile metals, not some obscure resource, but silver, is quietly being squeezed from both sides, demand surging and supply tightening. That squeeze is real, and right now it's setting up a scenario where the next 10 days could unleash a shock that many investors simply aren't prepared for. We are living through a moment when industrial demand for silver has ramped up dramatically. Silver is no longer just for jewelry or coins, it's become essential to technologies powering our future. Solar panels harvesting clean energy, electronics and semiconductors behind every smartphone and AI-driven device, wiring and circuits of electric vehicles, and more. Kodak Securities +2 MMTC PAMP +2 The Clean Energy Revolution, Digital Infrastructure Bill, doubt, and EV adoption are pushing silver demand to levels many would have thought extraordinary just a few years ago. Discovery Alert +2 Discovery Alert +2 at the same time. Production simply cannot keep up. Global output is constrained. Silver today is mostly produced as a byproduct of mining other metals, which means its supply doesn't respond quickly to rising demand or rising price signals. Crux Investor, COM +2 Metal. COM +2, what this creates is not a temporary blip, but a structural deficit, one that has persisted for years. Metal. COM +2 Sprott +2, but there's more. Macroeconomic conditions are shifting in silver's favor. With expectations of interest rate cuts, a weakening dollar, and inflation pressures, non-yielding assets like silver stand out as attractive alternatives for investors seeking protection or upside. Deriv. COM +2 affects Street +2, and unlike speculative bubbles of the past, this rally is being built not on hype but on demand fundamentals, structural scarcity, and real-world usage. Gold Silver +2 DWS +2. Now imagine all these forces aligning at once. Industrial demand right when renewable energy installs surge, supply still constrained, and macro trends favoring metals over fiat or interest-bearing assets. In such a scenario, silver doesn't just rise, it leaps. A sharp, almost vertical move in price becomes very possible. Here's the kicker. Many market participants, from casual investors to industrial buyers, may not be fully recognizing how tight the supply-demand tension has become. The complacency could be widespread, so when a trigger hits could be renewed central bank dovishness, a spike in demand from solar or EV sectors, or broader economic shifts. Silver may react suddenly and violently. For those positioned ahead of that move, the next 10 days might offer one of the most asymmetric risk-reward opportunities we've seen in years. But for those late to realize, it could feel like missing a rocket launch. This isn't about chasing a trend. This is about recognizing a structural shift, a transformation in how the world values a metal that quietly underpins modern technology and tomorrow's energy infrastructure. And in that transformation lies massive potential.